So it is kind of interesting because they control it. So CJ, what are some other factors that cause cryptocurrency's price to move?
Well, what we like to do is look at like on-chain wallets. So before we talked about how Bitcoin has a transparent ledger, so you can actually look at it and track particular behaviors. We like to look at whale wallets, or just wallets that have a ton of Bitcoin, typically over 1,000 coins. And we watch the behavior of those wallets to determine, all right, are the whales in the market, bearish? Are they thinking about selling? Or are they actually accumulating coins? Are they bullish for the long term? And being able to look at that and see that analysis helps us a lot because, typically the people with the most coins are usually the most right. Not always, but in many cases in crypto as well as traditional finance. Also, aside from just looking at whales on chain or on the blockchain, we can also look at long-term holders. So people who have actually been in Bitcoin for a very long time, as opposed to just short-term holders who may be new market participants and don't really know what they're doing or just new to the market. So we also make the assumption, like this chart right here, measures long-term holders. We could see that near the top here, long-term holders were actually distributing, right? They were selling into the top. And that would have told you, hey, I should probably take a look downward. We might be going lower. And then back on our way up, you actually see the inverse, right? You see a lot of those long-term holders buying and accumulating Bitcoin because they think the price is going to go up. So in many instances, it's very important to understand what the other players in the market are doing as well.
Got it. So basically what you just said is these fat wallets or whales, you look at their past historical data, right? And see since, I guess, common sense speaking, they've got this large or this abundance of Bitcoin. So they're probably right in terms of their predictions for it. So you pay attention as to if they're selling or if they're trying to buy more. Is that what you're saying?
Yeah, exactly.
Okay.
And they're probably going to influence the market more
since
than
they have
just
more of them. Got it.
Yeah.
Oh, so they control it. So it is kind of interesting because cryptocurrency is cool because that way the banks and stuff don't have control, but then the people that have a lot of Bitcoin have control. So it's kind of like the same thing, a little bit. Well, actually, no, because then you can still see it. So it's not as evil as corporations.
Yeah, I mean the key difference is eliminating the intermediary, which is the peer-to-peer. That relationship, the institution is monetizing or they're making money off of, whereas if you don't have to deal with that, you don't have to pay those fees. Also, when you talk about things like currency devaluation, you probably always hear your grandma or grandpa are oh, I remember when a Coke used to cost a nickel or $1 or whatever. We all know that dollars are depreciated in value. Regardless of the amount of Bitcoin whales, they can never create more than 21 million coins. Whereas with US dollars,
they can just keep making more.
If they want to, yes. And they did that in 2008 and after COVID in 2020. And so it doesn't have an immediate effect, but it's a gradual process of inflation and then devaluation of the currency. Whereas Bitcoin, you're not having to deal with that.
Copy that.